Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Thank you so much for tuning in once again. This week is going to be a little unique and different than the weeks before. You know, for the last couple of weeks, we were waiting on the Fed, waiting on the Fed. What are they going to say? What are they going to do? Well, last week we found out they did a 0.5% rate hike as expected. Remember, we said it could be as low as a quarter, as high as 0.75. That was a little unlikely, and they went right down the middle as most people were expecting. What that means on one hand is they kind of did what we thought they would. What it means on the other is, oh man, boy, is there a problem with inflation, which we've already known. But you know, going with that 0.5% rate hike actually means they're confirming what the suspicion was. Now, the interesting part is that it does not mean that they're going to continue doing 0.5% rate hikes on an ongoing basis, but it is likely that they could. What that means for mortgage rates is they're going to be volatile this week as we get key economic information that comes out. There are going to be days where rates plummet and go down and days where rates spike up. It's kind of the nature of the beast at the moment while the markets are getting their footing and figuring out what all this means. You know, the information can say one thing on one hand and the Fed's interpretation can mean something on the other. And that's where we find ourselves at a little bit of a catch-22, where on part of our life economically, we're trying to control inflation from running even more out of control than it already is, while at the same time we have an affordability issue when it comes to rates because mortgage rates have done nothing but gone up over the last 4 months. Now, there's eventually going to have to be a tipping point where that slows down and it kind of flattens out, and I don't know that we're seeing that right yet, but I know we have to at some point in the near future. It could be 3 months down the road, it could be 6 months down the road. It's going to be this delicate tango and dance between where we're at with monetary policy, inflation, cost of goods and services, labor and wages, and how they're keeping up or not keeping up with all that, matched with how do we maintain there be affordability in the mortgage industry for people to continue buying and selling homes. Those of you who are looking to buy a house, of course, you're still sitting at all-time highs as far as home equity, and there still are a lot of qualified buyers to purchase your home today, even at these new increased mortgage rates. The real question will be, moving forward, how much longer can we expect that to happen? And under what conditions? I think the conditions are kind of underpinning a lot of what we're starting to see with rates, obviously, but also with the length of time homes are on the market. You're starting to see that they're taking a little bit more time. They're getting less offers. There aren't as many people outbidding each other as there were just a few months ago. And some of that has to do with the market cooling down a little bit in general. Some of it has to do with inventory, and some of it has to do with the cost of borrowing money right now. So all those things are kind of working together, and every single week we're trying to sort out, okay, what does that look like now, and how does that paint a picture for us moving forward? So this week you should expect volatility in the rate market. There are a number of Fed people speaking this week, as well as we're going to get the consumer price index this week as well, and that's going to give us kind of a barometer for where we're at for inflation month over month, which then of course means where are we at with inflation year over year. So be on the lookout for that this week. Expect volatility in the markets. Those of you who are looking to refinance, stay in close contact with your loan officer and make sure you lock on a day where the rates have gone in your favor. And those of you looking to purchase, if it's been 30 or 60 days since you had your pre-approval or your full DU approval run, make sure you contact us now so we can get you reapproved for today's rate and today's pricing compared to where it may have been only 30 or 60, 90 even days ago. As always, please feel free to share this video with people you know and like and love, and help them be aware of what's going on in the market so they can win in real estate in 2022. Please be sure to like this video, comment, share, DM, send us a note, send us an email, give us a phone call, and stay close so we can help you make the most out of your own personal choices in mortgage to real estate this year. Thank you so much for watching. Have a great week, and we'll see you again next Monday.